Hello, everyone, and thank you for joining us today for our discussion on balancing risk, decisioning, and customer experience, specifically focused on fraud detection and mobile deposits. My name is Carrie Cantley, and I'm with Mitek Systems. I'm Vice President of Digital Banking. And with me today, I have Jim Mortensen from Datos Insights, and I'll let him do a little bit of an intro. Jim?
Sure. Thanks, Carrie. Yeah, Jim Mortensen. I'm a strategic advisor with Datos Insights. About 30 plus years in financial services, working both on the solution provider side as well as on the financial institution side. Looking forward to the discussion today.
Absolutely. And thanks so much for joining me for the discussion, Jim. Let's dive right into it and talk a little bit about the state and the maturity of mobile deposits. I think we all know mobile deposits and the capability has been around now for quite some time. Both in your career and my career, I think we've seen it get introduced into the market and then strong adoption across the consumer base and small business space. I'll talk a little bit about the numbers and then ask you to give some additional insights on what you're seeing here from a statistic perspective around mobile. So 40% of FIs report that they have very strong adoption rates. I'm really interested, though, in that next category, which is, a higher adoption rate based on customer experience and some of the things that are happening with FIs to drive that. The other thing that I think is very interesting here when you think about the maturity of mobile is the reduced operational costs and the percentages of operational costs that financial institutions have seen since the kind of the go live date of mobile deposits. Jim, what's your perspective on the maturity? What other statistics that to you, as you dug into this topic, especially from a white paper and data's perspective, did you find interesting?
Yeah, I think, well, first of all, let me just talk a little bit about the research that we conducted. It was actually based upon a survey of 60 fraud prevention professionals in the US. And the respondents had a pretty good distribution across FI size. So a lot of different viewpoints. And we focus on the collection of data related to both the adoption, as you see here, fraud experiences, and prevention technologies. And I think what was fascinating to me about these statistics is how thoroughly mobile deposit has transformed from what I would call more of a sort of nice to have feature to really an essential banking service for FIs. I mean, the other, sort of drilling down a little bit further into a bit of this data, we stated the 40%, but 80% of FIs had between 41% and 100% adoption too. So it's really well penetrated within the client base. I think these high adoption rates that we're seeing are particularly interesting because most institutions that have well over half of their customers on mobile deposits, and it's pretty much across the board with respect to generations. What's this resulted in is that the FIs, the banks, have a lot of focus on how to more optimally manage this channel to better expand the usage. I remember when mobile deposit was really sort of first introduced. Obviously, there was a big concern around duplicate deposits, and not just that you have a duplicate within the mobile channel, but you duplicate, one deposit mobile channel, and then you got the paper kind of winding up in a different channel directly deposited. And so there was a lot of concerns, I think, at that time with respect to limits and things of that nature to better control that. But we really see FIs trying to move more into a mode of increasing adoption, increasing the utility of the function, which is while still managing those fraud concerns that this channel has, just like a lot of the other channels.
Yeah, and I would say that was, one of the things from the paper and the research that was quite interesting to me is like from that, you could definitely recognize It's not only a staple, it's a customer experience play, but people have gotten so used to the availability and access to do mobile deposit that I couldn't imagine my bank ever taking it away, right? So it's become part of banking. It is, that industry term around mobile deposit. I think everybody understands it, right? I mean, from the end of the day, I open my online banking, I take a picture of the front, take a picture of the back, right? I enter an amount, pretty easy process. We used to call it outsourcing of proof, right, to your customers. But customers and clients have a very good satisfaction rate with being able to have that experience from wherever they are in their life and not being able to be concerned about timing or having to get in the car to do it. So it's become one of those things that you probably will never be able to take away because the customers have adopted it so well, while banks and financial institutions and customers expect that their banks are protecting them from fraud, right? So what does that mean when we think about priority, customer experience being linked to not only do I have access and how easy is my access to my financial industry, institution and my money, but also that my bank is protecting me. So, talk a little bit about these statistics here in terms of, we do know across the industry, there's been lots of polling and lots of analysis that 60% of consumers say, if I have a bad experience or I've been impacted by fraud where my bank has not, right, been the one to help me or protect me or help me resolve my issue, they may walk away. So, pretty high number when you consider what you need to do, right, in that process flow for your customers. But what are the other things that we see here from a fraud spending and priority, especially because we do know the rise of check fraud has been so prevalent, regardless of channel, right? So across every channel, there's been a significant issue around having to protect around check fraud. So anything
Yeah.
you would highlight here from a statistic perspective, Jim?
Yeah, I think the interesting thing is that in some related research we looked at sort of the consumer, to your point, the consumer impact of having a fraudulent item suspected on their account in terms of mostly from an in-clearing perspective, and
Mm-hmm.
and it is a base expectation I think that consumers have to make sure that their financial institution is protecting them. And if you think of the average consumer, their level of understanding of the challenges, let's say, of check fraud detection, given that it's really an analog instrument and not
Mm-hmm.
not like a credit card transaction, for example. And so they don't have that understanding, but they certainly expect the same level of prevention and care that the financial institution is going to do on their part, both in protecting their money as well as their data. And they want to feel that that money, is the highest priority from the bank's
Right.
perspective. I think, 60+%, which I think is an interesting number, that said they would switch banks following fraud that would occur on their account. In and of itself represents a massive attrition risk from that perspective. Now, I think we all kind of know that it's a big deal to move from one bank to another, especially on a DDA account, and there's a lot of tentacles that the consumer has to address with respect to that. So that number might be a little bit lower, but I think just the fact that consumers are saying that is something that banks really have to pay attention to, especially when they're trying to constantly improve that customer experience.
Absolutely. I think, the other highlight that I would say here is this particular one around fraudulent checks, right? Like you said, that consumers don't understand, well, checks follow a different flow and they have different regulations. And, the expectation experience is they're right around electronic, that fast convenience of what happens when I have something happen to my credit card. I won't say debit. That's a different, right, animal all in itself. But the expectation is the experience is similar. And when it's dissimilar or they don't get the right insights or communication, that's when there potentially could be this risk of attrition like you're talking about, even if there is complexity. I think that's the service after the challenge is sometimes what makes me want to stay with a company versus the experience of having it actually affect my account. While mobile is a highly adopted channel, that's what we were talking about. It's a staple now. It's part of the process. It is a good channel, a solid channel, and customers expect it from an experience, and it's pretty simple and easy. We know that fraudsters have evolved their tactics to basically penetrate all channels. And it's beyond like the early, you're right, that early, oh my goodness, what's going to happen from a duplicate event? I've got to have duplicate protection in channel, across multiple days, months, weeks, right? Depending on the protection level there for duplicates. But now you've got this challenge around it's really easy to create AI type checks. Like we see them even where they've been created on a phone and it's a picture of a picture. So there's other things that are happening, counterfeits, altered, stolen. So it's across kind of the whole environment of channels, not just necessarily mobile, that we see fraud today. But the most important part to this is being as real time as you can. Anything that you would highlight here when you think about the evolving tactics in relation to like this cross-channel behavior of fraudsters that we need to consider as we think about protection?
Yeah, I think the key thing about this is that, kind of not to belabor the point, but the mobile channel is just as strong and ubiquitous, let's say, as the other channels now. And so customers tend to look at it as a situation where they expect the same level of controls and so on. Now, when you look at check fraud in particular, it does provide an opportunity in the mobile channel for individuals, and this kind of put the duplicate items to the side for the moment. But when you're looking at, say, a counterfeit item or a forged endorsement or something like that, I think from a fraudster perspective, or even what I would call the citizen fraudster, which might be more of an individual deciding to, like, more on an opportunistic basis to try to take advantage of the system. They think there's a level of anonymity, even though we know that there's a lot of information that we have with regard to device information and so on, but they believe there's a level of anonymity, at least when you're not there in person or having your picture taken, let's say, on an ATM. And so that kind of makes the mobile channel, a little bit more vulnerable in terms of the fraudster's attraction, let's say. That ability to feel somewhat anonymous, I think, is important. And I think consumers similarly are interested in that. I think fraudsters are really exploiting that rather. Between the seams, if you will, between physical checks and digital processing, and so that's one thing that I think we need to look at the mobile channel just like all the other channels, with its own, if there's aspects that are unique, but a duplicate item, now one item might be in mobile channel, the other might be at the branch or through an ATM. And so having that visibility across channels and that ability to detect this type of behavior in real time and affect it in real time is become increasingly important. And I certainly saw that in the responses that we got back from the financial institutions.
Yeah, and this is where and we'll talk about a little bit more as we go through this time together, but this convergence of how do I enact a really good customer experience, protect myself real time, and manage some of the fraud risk from an availability perspective, right? So what are those triggers? Funds availability is a big one, right? So if you have different experiences in your channels, fraudsters exploit that too, right? If I have more funds availability in one versus the other, or a myriad of both, right? I make a deposit in one channel, funds become available for me to use in a different channel, or so on and so forth. Those are the things that, quite honestly, the sophistication and intelligence of understanding, like you said, that physical to digital environment that we're in now is where the fraudsters are really taking advantage of some of the decisions that are made, especially if they're made after deposit versus real time, which we'll talk about a little bit more as well.
Yeah.
And as we get into this next section, I think I want to start out almost, let's do a poll, Jim, around kind of this, what's the balance for your FI? Like, what are the most valuable aspects of offering mobile deposits? We've got a couple different questions or options here. Is it really around operational expenses? Is it customer satisfaction? Competitive necessity, right? If my neighbor has it, I have to have it too. Otherwise, right, those are places where a consumer make it one decision or another. Increased customer engagement, so getting that digital experience and understanding the behaviors more if they're using your online banking application and things like that, or just, hey, it's the flexibility kind of, that drives into customer experience a little bit, but that idea of we're a 24/7 bank, and we offer mobile, and that's the way you can do deposits or transact with us. There's some brand as well as some marketing value in having that availability. So anything like you would highlight on here? I know we're going to get to the results of the poll in a minute. I want to give it a few more seconds here to kind of get the participants to weigh in from their point of view. But anything you would add on valuable aspects here?
No, I think what's interesting to me, and kind of saw that in our research, is how priorities tend to shift a little bit based on the institution size, the customer base. Community banks approach things a bit different from credit unions as well as larger financial institutions, and that's I think an important thing to really understand your customer base as it relates to their impact on customer satisfaction. What is really their expectations as well.
Yeah, so I'm going to go ahead and pop to the results. We've got a pretty good participation so far in this poll. So let's see what folks are saying in terms of importance. There we go. I'm actually a little surprised by this. And maybe it's because I'm going to start from the bottom up, right? Operational expenses. That was one of the key things that we wanted to take advantage of when we first launched mobile deposit, right? So think about that heavy paper processing we used to do, right? And when Check 21 came along, we were able to enable some image-based solutions. Operational expense reduction was up there at the top. As well as we weren't quite sure what customers were going to feel about it. Was it going to be adopted? Well, we saw in the numbers, right? It's heavily adopted. It is the staple. I'm 33, 38%, very close in terms of, hey, I got to compete. It's a necessity, and it's a customer satisfaction play.
Yeah.
What do you think?
Yeah, I think so. I mean, I'm a little bit surprised based upon the research that we did. It's a little bit different. There are some common themes, but maybe it depends on how you interpret it. But it'll be interesting to look at the next slide. Yeah, there you go.
Yeah, so let's pop into it, right? So that's what those folks who kind of took the poll with us thought. And here's what the survey results were. Want to talk through what you see kind of from a poll perspective versus the differentiation in the research?
Sure. What jumped out to me when I did the research originally is that there, to your point earlier, there was a clear economic benefit that people saw as a result of doing mobile deposits, both in terms of sort of outsourcing that proof function, but also just in general, also taking the deposits at the branch. What was interesting also is customer satisfaction in the survey came up pretty high. In our poll, it came up number two as well, or number one rather, I think, in the poll we just took. And so that was pretty close. I think the competitive necessity was also pretty high in the poll that we saw.
And those were the two ones that were really close in this poll too, right? So.
Exactly.
Yeah.
And, I think the other thing that's really important here is that, having that customer focused benefit tends to outweigh the operational concerns nowadays, especially.
Yeah.
Because having that improved satisfaction and increased engagement, and that competitive necessity aspect, you can't really, I think it'd be very difficult for FIs in today's environment to not have the mobile deposit function. And so that to me makes a lot of sense as well. And I think there's also a difference in how larger institutions, as I said earlier, a bit prioritize customer convenience versus some of the smaller institutions. And it's a bit of a different relationship as well there.
Yeah, especially with their customers, right? The relationship's
Exactly.
a little bit different. While they like mobile, they definitely, if it's a local credit union and they have a strong relationship, they may opt to go into the branch more often, those kind of things. So it's a membership type of experience versus some of the larger institutions or a general bank, on the consumer side would have.
Yeah, the other thing is that it was kind of interesting in this survey that we did, the how ability to serve remote or attract younger customers rather was relatively low on there. And at first I thought, well, you think about a demographic, it might be more apt to use it, but I think mobile deposit has really sort of penetrated that in large part in the sense that it's attractive to a larger range of demographics. Now, I think when you look at older folks, like I'm talking about like people in their 80s, they're maybe not as likely to use something like that, but certainly, sort of the millennials, the baby boomers, the younger baby boomers, certainly have heavily adopted it. And quite frankly, younger customers don't really use checks that much anyhow. So that made a lot of sense why that did not rise as much as you might think to the top.
Yeah. The other thing that, right, impacts customer satisfaction, like we said, if those were the top things that came up on the survey in terms of priorities, is of course availability. It looks to me like there's some correlation there in terms of my availability drives some of my satisfaction, as well as, the implications in terms of, risk as well that need to be considered here. So I want to talk about kind of the results here in terms of the banks that have decided to increase funds availability, those that have decided to decrease, and the kind of the differentiation in the experience on the satisfaction side that we see.
Yeah, I think one of the things that was interesting, we really wanted to understand, as it sort of relates to availability is, what have banks doing with respect to deposit limits through the mobile channel? And so we looked at banks who had actually done increases more recently versus those that had done decreases in their mobile limits. And the slide reveals one of the, I think, probably one of the clearest correlations in our research. There's a direct relationship between deposit limits and customer satisfaction there. So when you see, banks that had increased their limits, they said it had a favorable impact on their overall customer satisfaction. Whereas banks that decreased the limits, it tended to have a more of a negative effect on their customer satisfaction. So, kind of leads me to believe customers view higher limits as an expectation rather than a benefit. And that's also directly related to ultimate availability targets, right? In terms of what they expect. A customer would not necessarily expect a different level of funds availability in a mobile channel versus in an in-person channel, right? They don't really view them largely different. And I think the key insight for me is that real-time detection enables higher limits to be offered. And so you have a higher level of confidence, but it also gives you that ability to give greater availability, with a corresponding, level of risk. I mean, creating a sort of a win-win scenario when you're able to actually do that.
Yeah, it makes a lot of sense. The other thing I think, if you think about customer experience today, is I expect whoever I'm transacting with, whether it's a financial institution or some other product that I use, that they know me, right? And there's some experiential understanding. And so if I consistently make deposits for a certain dollar amount and those always clear, and I have a history of that, and it's the right history. I'm not saying there are some things, other triggers that may say to my financial institution, oh, wait, we don't, there's some risk here on this item or transaction that we won't make available. But maybe my availability should be different than yours, right? Based on, how long I've been at the institution, how often I transact, and if I've had any issues, or right, the relationship, the share of wallet, right? So if I have 15 accounts with you, like all of those things should probably be considered, and that's a
Right.
differentiator. If you know me, then I feel really good that you're right treating me the way that I want to be treated because of funds availability. While all people should have a level of funds availability, right? There's some things that can be done there from a risk perspective to drive other customer satisfaction.
Yeah. And
Balance
I
the
would
two,
say,
right?
I was going to say, I think it's, I kind of view it on two levels, and you kind of, alluded to it, but it's the risk of the transaction and the value of the relationship, right? So
Mm-hmm.
if you can
Mm-hmm.
tailor that, and change your availability based upon that broader relationship, because if if you don't meet that customer's expectations, that there could be a damage in that overall relationship that is beyond the value of that item, right? And
That's
so
right.
I think that's a really important factor. The more tailored you can make that in a real time environment, the better off you are.
Yeah, so let's get into the nitty-gritty on fraud. I'm going to do a poll, and then there's a couple questions as well that I think I'll probably ask while we're getting into the details of what's going on with fraud. What do these folks that are with us today think is the most kind of concerning area of check fraud? Is it counterfeits? Is it altered, forged, duplicate, forged maker signature? So forged endorsement versus the signature on the front. So the different types of fraud. What are you seeing when it comes to specifically the mobile channel is the most concerning or most often type of fraud that the banks are seeing, or those that are on the phone with us today most concerned about? So while they fill out that poll, there was a question, and it kind of ties into this, and it ties into that conversation of duplicates. Someone asked, what could be done to limit the risk of multi-deposits across multiple FIs? All solutions seem to be concentrated on the activity that occurs in my bank, right? So I call it the island versus the, right, the nation kind of concept is everything's happening here. What's happening, across the institutions? What can be done around a multi-duplicate? So I deposit a check at one bank's mobile deposit channel. I deposit that same check in another bank's deposit channel, right? So I'm a multi-bank fraudster, right? I'm not picking one to do my fraud events with. I'm doing multiple. So what could be done there? I know I have my perspectives. Jim, what is yours?
Yeah, I think the real value there. I mean, this kind of underscores the value of a consortium type solutions that can
Mm-hmm.
leverage this across multiple banks, right? So early warning is one that has a version of that. There are other institutions, others that I think have that, that allows you to look across multiple and get warnings. My sense of a lot of those aren't as real time, as we would like those warnings to come in, but you can definitely, this is a classic example of an opportunity for doing it across multiple institutions. I will say one challenge, though, a lot of times is that whether you have visibility to a channel where the paper might ultimately wind up, so like in a check cashing agency or something like that, that often is a challenge with those types of solutions. They might not have that coverage.
Yeah, so I agree. You've got to think about detection within your financial institution and then detection across for those that are more real time if possible. No signal is a bad signal, in my opinion, right? It's a combination of intelligence that's going to get you the information. But I certainly think that, no one can sit on an island any longer, right? They've got to sit up, we've got to start sharing at the appropriate level information that everybody gets some protection. I think we've got pretty good results in for this poll. So let's see what the results were. Of course, counterfeit came in number one, then altered, duplicate check deposits, not as high as I would have thought. And then, leading, kind of coming in last is that forged maker signature. Some forged endorsement, but I think counterfeit is top of the charts.
Yep, definitely. I think, and that's consistent with what we had, at least the counterfeit being in the top of the chart. Our results in this, what I thought was sort of, remarkable about it was the distribution was evenly split across the various types of check fraud. There was no single dominant attack vector. I certainly, when I developed the question, I expected duplicate check deposit to be sort of at the top of the list. I think a lot of them, a lot of financial institutions aren't necessarily dealing with that as disproportionately, let's say, as other types of fraud.
Right.
So you see like counterfeit, forged, all at about the same level between 17 and 22%, which I think is pretty interesting. And it pretty much mimics what I've been hearing more broadly across channels as well.
Yeah, I think, with the nuances of stolen mail and the ease of creating checks or altering the physical checks, right? They've got plenty of options and opportunities to walk into any channel, depending on, did they alter the dollar amount? Did they actually recreate an item and counterfeit it? Those opportunities are wide now in terms of capability as well as usage, regardless of channel. I would agree.
Yeah.
Duplicate, I was expecting to be a little higher. I think with folks requiring a mobile deposit endorsement of some type on the back of the check, maybe is helping some of that. So if they have any real time in session, hey, we see a similar endorsement for this check that we've seen before and they're rejecting it on the front, that may be helping that and driving that kind of number down a little bit.
Yeah, I think one of the things I was going to mention about sort of like diving a little bit deeper on this particular question, I looked at it by financial institution size as well. And the larger institutions tended to experience a bit of a different pattern. I mean, not overwhelmingly different, but there were more counterfeits and forgeries, fewer duplicates, which led me to believe that a lot of the larger banks may have started to really kind of solve that duplicate issue, which may be why it's not as high as we would have expected otherwise.
Yeah. There was another question around why don't banks force that endorsement, that mobile deposit endorsement across, or do they force the endorsement, restricted mobile deposit endorsement across the board? I don't know if you have any insights into that, Jim.
I do not. Don't have.
So we see some inconsistencies with that, where there's a required endorsement, but not necessarily a restricted endorsement, depending on, how strict that endorsement field requirement is on acceptance of the check. But it is something that, all banks should consider as a potential safeguard, to just understand where the original item started, right? From a mobile versus other channel, especially if you're trying to do some kind of detection or analysis across channels. Let's go to the next slide here. We're going to talk about real time. So what do we really mean by real time? Is the risk, and how do you mitigate it? And what does that look like? We're going to do another poll because I think it's really good to just understand from the audience what they define real time as. Is the definition when you consider real time in your financial institution or in mobile deposit fraud detection, is in session what you consider real time? Is it after acceptance but before posting, or some kind of, in between, or is it day two, so after posting? What is that experience when we talk about fraud detection in real time? What does that look like? Jim, your perspective. I know we're going to look at some survey results from the paper, but your perspective on real time. Love to hear.
Yeah, I think it's always been when I first kind of got into the industry and heard about real time and so on, it seemed like it was sort of self-evident, but I quickly found out that it isn't. There are situations where real time might just mean I get a real time response. I get some sort of resolution at that point. It doesn't necessarily mean a decision was made, but it means that I at least got some sort of resolution, and that resolution might be, hey, we'll take the item, but we'll find out later. And I think what we've discovered is that in many and that's, I think, a key. Really, you want to give that depositor an expectation about their item in terms of acceptance, but also availability on a real-time basis, so that it has to be sort of in session to have the greatest impact on them.
That's right. So let's see what everyone defines. So this may be, this is interesting, right? Based on what we were just talking about. So real time for folks, maybe this is what they're doing today, right? Based on that question. After acceptance, okay. In session, 41%. So it's kind of an even. And then a very small number, 15%. I guess it's not really too small, but 15% say, hey, look, we're doing check fraud or fraud detection on day two, which is after posting. Maybe they have some availability controls in there. But this is right, that transition that we were talking about that says, after acceptance is good, right? You've accepted the deposit, you're doing some fraud detection. Maybe you do some analytics before it goes out the door so you can extend your hold. The best case scenario would be in session, which is identify the item as risk. I've seen it before. I know it's fraudulent. I'm going to reject it and not accept it on the front end. Some, I know there are different nuances of interpretation of if the mobile deposit is taken, that's considered acceptance, and then I have to go through the whole process of getting a return back before I can do anything based on interpretation. But the goal would be, as much as you can, evaluate it as you're accepting the deposit so that you can reject it if possible for fraud.
Yeah. And I think, this really kind of reflects where FIs are with respect to the degree of real time that they've been able to implement, and which really comes back to how well you can, how well you can assess that risk in real time and make a real decision. And so on the slide you're showing now, this kind of speaks to some of the survey results that we got during the research, where we wanted to find out, the organizations that participated, what their plans to implement real-time check fraud detection in the mobile deposit area, very specifically. And very similar to this survey we just took, 40% said they have real-time functionality. But the good news, I thought, in this, and kind of hopeful, is that 20% say plan to implement it in the next year, and another 33% said it's on the longer-term roadmap. So it's a clear, indication that that's where the industry is moving, to get much more real time with respect to the complete decisioning, risk assessment process, decisioning process, and ability to give that customer a resolution, that is more definitive when they actually make the item or deposit the item.
I have another question, and I think it aligns to even the study, especially when we're talking about experience and adoption. Do you expect mobile deposit to remain an important part of customer processing and experience as check writers decline? Like the
Well,
continued investment and access point of mobile as we see kind of that the different, like we were talking about, right? The different generations and usage of checks over
right.
time is the importance and investment in mobile actually going to kind of wane?
You
Maybe
know,
in 25 years? I
yeah, I
don't
was
know.
going to say, you know, I love this question because, I think back when I was in college, which let me tell you is a long time ago, I was actually a proof operator. So I used to actually encode checks, and while the level of check volume has come down substantially, since then, it still seems to just sort of very subtly wane.
Mm-hmm.
We always used to, it may be a little bit of a morbid kind of thing, but I think checks will die with the people who write them. Ultimately,
Mm-hmm.
it is a generational thing. There's, certainly aided by real-time payments and other mechanisms that have come into play. But I fully expect that the last check that gets written will be fraudulent.
I agree with you on that. Yes. Yes. And it'll be for a large dollar amount too. The other thing I'll say, right, is this whole B2C, C2B environment, right, is the one place that you have to solve. Consumers have, like you said, adopted a lot of the different channels, regardless of generation, even, right? We're seeing higher adoption rates, but B2C is still prevalent, right? How many of us have received recently a check in the mail from some kind of, resolution, reimbursement, you overpaid here, so they write you a check, whatever those things are, right? I certainly know I have. And so because of that connection of, well, I don't even know how to get to you because, right, I'm just giving you cash back or reimbursement of some kind of overpayment, they're going to mail it to you every time because name and address is primarily what I have. I don't have other information to actually get you the money any other
Right.
way. So those are the places, right, in my mind that have to be solved for over time that will really drive that. Is mobile deposit really going to go away anytime soon?
Right. Now, I think just one other thing on that, there was an executive order that was listed that was issued to
Mm-hmm.
do away with checks by September in the federal government. Now, I'd be really surprised if that actually happened. And the question is going to be is, to your point, how do they deal with people like that are either unbanked or, they don't have the banking information for them and it's not being provided. So they're going to always have to have some other, sort of fallback.
Yeah, there'll be some exclusions, we all know, right? But high dollar treasury checks walking in the door, right, for a cash out of $10,000 doesn't make sense to me either. So yeah, there certainly is a balance there, right, Jim? And
Yeah.
depositing that, you can't make, based on your mobile deposit limits, you wouldn't be able to deposit that in mobile. So you're having
Anyhow.
them come in your branch. This one's an interesting one, right? To, when we get into, okay, so we've talked about process, we've talked about customer experience. We talked about the fraud risks and what's priority and kind of coming in the door from a fraud protection, counterfeit being number one that I got to look at. Then there's the technology. So what are you using? How are you using it? Are your applications connected? What does that look like? Jim, when you did this survey and asked this question, kind of the underlying, maybe aha, interesting moment when it comes to this. And I think when we were talking about it, there's no right or wrong way. As long as, right, you're making the ability to make the decisions as close to real time or in session as possible. But just kind of walk us through what the results of these questions were.
Yeah, I think we were trying to get at a key question here around determining funds availability, the risk of an item, let's say, and whether you believe it's fraudulent, and also later in the process, the funds availability. Now, obviously, if it's fraudulent, you're going to hold the whole item necessarily. But we wanted to understand how financial institutions were configured from a systems perspective. Now, what we found out was that, for the most part, people have two systems. Like 60% had two systems, 28% had a system, two separate systems in place. And now it does, to your point, it doesn't necessarily matter, as we delved in a little bit deeper here, that you have two systems. It just sends it, two systems or one system. Two systems makes it more challenging to integrate and keep alignment with both that risk assessment process and also the funds availability, because you want to be able to have that connection in place, because that separation creates integration challenges, and it doesn't allow you to fully optimize what your treatment is, right? I think it's important. Having this fragmented is I think more of a challenge to maintain it in a long term, and having it consolidated.
I think
Multiple systems.
Jim's point around consolidation, I think it's really important around making sure you can get as close to the customer process and deposit as possible in order to protect both the customer and the bank. The interesting thing about deposits, right, is, and I think you highlighted that earlier on, is you've got a focus on who is making the deposit, right? The relationship, me as a, am I a fraudster or am I doing well? Am I a good guy? And then there's also the check. So I may be great, I may be fine. Someone may have given me a fraudulent check to pay for a piano or whatever those cases might be, right? So there's the depository relationship fraud consideration that needs to be taken into account with your funds availability, your technology real time, but also the check itself, right? The payment, and is the payment good, and what kind of holds do I need to make on that because it's at risk versus my customer is, the good guy or the bad guy that need to be considered in that technology stack. There was a question in here specifically around AI and machine learning and how does that improve mobile deposit fraud beyond just kind of the traditional rule-based systems. And then there was another one kind of in that same area which talked about speed and performance. So like as you try to integrate all of this stuff up front, how do you make sure that it's in milliseconds or within, right? If we're talking about in-section detection, how do you do that? My opinion is you partner with a technology solution that can run in the session the right way within that mobile deposit process or methodology. AI is definitely, when you think about advancing rule-based systems to detect those things quickly, certainly is a way, to enhance some of those abilities when you think about fraud today. Anything you would add there? And then I think it ties into this benefit component of real time, right? Then when we asked, when you asked the top three, what are those top three? What did they say around implementing real time check fraud?
Yeah, I think leveraging the AI capabilities with regard to image forensics and things of that nature really help a lot in terms of bringing down the false positive rates, rather, which obviously is the challenge we have. From in check fraud detection historically has been the false positive rates that really give you. False negative rates that give you that challenge, right? And so that operational efficiency, it really helps a lot here. I think on this slide, you can see when we wanted to understand what the benefits were, what people really perceived as benefits, reduced fraud losses was far and away the highest benefit that people are looking for with respect to this. But right behind that, a number of things all related to customer satisfaction. Improve customer satisfaction directly, shorter hold durations, reduce false positives, fewer holds. All of those types of things were seen as the benefits of having real-time detection in place and giving that, that sort of, decision and to the customer while protecting the fraud losses substantially is really kind of the message I got from this particular question.
Yeah, and it certainly is that balance, right? High dollar losses, especially as check fraud has risen, has become such a big concern. But it's nice to see that people aren't willing to give up on making sure their customer satisfaction stays at the level it is, and looking at how do I advance my fraud prevention detection capability so I can keep my customer satisfaction where it is, but also, right, that prioritization of fraud losses. I think
Yeah.
it's really important in session. We keep saying that word, right? When we define real time, it's got to be as close to the transaction as possible. There was another great question in here. It's not necessarily an in session real time fraud, but I actually believe that it has some implications to detecting fraud in the future, and it's about image quality. The question was around, do we think the IQA, the image quality standards, and what we do today related to black and white TIFF and all of those things, does it really help us? Is it really up to snuff? When we talk about advances in technology, we capture the image in color, right? We can process the image in color, but then we convert it. And so then you lose insights that are obvious in a color image, especially in fraud, right? And this is another value proposition of doing it in session because it is a color image. And if you are doing it with a real-time solution, consortium integration to your mobile channel, you get that advantage. Where if you're doing it kind of after it's already been converted, you lose a lot of what I call the declarations and insights, the borders, the security features, the type of check, right, nuances that may be on there when it gets turned to the standard that it is today. What's your perspective on do we think image quality is up to snuff for 25, where we are from a technology capability perspective?
I think there's in a lot of cases it is. I think there's still, it can always be better ultimately. We're constantly improving things, but I think it's really key to that detection ability. And certainly that forensic image analysis requires, that you have the best quality images possible. And so I think, I definitely think that it's either there or getting there is kind of how I would term it.
Yeah, I think there's opportunities. The closer you get to where it was captured, the more information you have. And then, like you were saying, there's other insights that you can gain in session to detect risk around both the depositor, and the check, right? Where it's being captured, the device, any of that information that it can be used in the right way, a smart way to prevent or detect fraud related to, this mobile device is, making 400 deposits really fast. It's sitting somewhere on someone's charger. Then, there's all kinds of things that you can glean from the device information to the capture to actually transmitting the transaction in session to be able to detect and prevent fraud.
Yeah, I think that if you look at it especially look at it that way, that there is, there are a lot of advantages to mobile capture and detection at that point because you do have a lot of additional, pieces of information about the device and other aspects that help you make a better decision than if you had it in an ATM channel, for example.
Yeah, and multi-layered always is important. We've talked a little bit about that, right? So real time in session, got to start considering that in your processes, right? Get as close to the deposit as possible. Consider the depositor plus the check and making sure that you have the right signals in place and doing as much rejection of that as possible. But there's also the after acceptance component that's really important, right, Jim? And then there's the other side of it, which is the whole process of your other channel, multi-channel, in clearing, all of those things connected. Highlights on multi-layer approach from both what you've seen out of the survey and the results of the paper, and other things that we have here around what a sophisticated real-time fraud detection should and could look like in a financial institution as they move forward with the assessment and investment?
Yeah, I think multi-layer obviously is very key, and having a capability that not only leverages all the signals you can possibly use, as especially the relationship, as we mentioned earlier, with the customer, right, and taking that into consideration, as you make that decision. I think the other aspect of check fraud detection in general is that dealing with those false positives in the most effective way possible, right? And being able to resolve them quickly is key, especially with the level of volume that we continue to see around check fraud, across channels, without regard to that. So I think the key thing for me is to have this sort of customer first approach. Obviously, with a mind towards your fraud losses, obviously, you can't go crazy with that. But it's really important to understand that customer experience, what is challenging for them, and how you can better address it with respect to making quicker decisions on a real-time basis.
Yeah, I think you had quite a few of those, like, consider your end-to-end, keep the customer in mind. With the new technology, AI, I think even when you think about multi-layered approaches, you can have multi-layered approaches to your business rules, right? So they're really driving down to, is it this? No. Is it this? Yes. Is it this? Right. So that your analysts, those that have to look at it, if you're doing a review and trying to get as close as you can to a real-time decision, can really be looking at fraud versus suspects, right, in that case. And so that's the way that you can apply new technology and AI to that, and considerations of all the fundamental elements, right? The transaction, the device, the person doing the deposit, the actual check itself and experiences around that. Don't sit on an island, right? All of the consortium capabilities that are out there today. All signals are good signals. Make sure that you can advance that and make it operationally efficient when you do have to review someone. So kind of thinking about that end-to-end process is really important.
Yeah.
Thank you for.
And one other thing I wanted to make is bringing the customer. I keep on harping on the customer a bit, but also the other aspect is bringing the customer into the decision-making process, through alerts that you could send them about specific items that are suspect, right? It helps you with the false positives. It gets the customer would actually look at it as, tend to look at it as a benefit. And the more you can do that, and the more specific you can be specifically around getting the, giving them the payee in the text.
Yeah, so they know it's you. Yeah.
Exactly.
Yeah.
Exactly.
Yeah. Yeah, I agree. I mean, we experienced that with card, right?
Yeah.
Hey, did you do this transaction at this gas station at this time? And we go, oh, nope, that wasn't me. And they say, okay, well, we're going to open a case and, work the case. Thank you for your information. So I agree with you, right? Engage the customer. It's an end-to-end process, starting with the customer, ending with the customer in mind. Jim, great insights. Really excited about this paper and the launch there. Thank you for kind of joining me for this, and we appreciate the time. Thanks for everybody that joined us today. We'll follow up on the questions as well.